The essence of the year 2023 was defined by a significant crash that shook the Texas housing market. At the beginning of the year, the Texas housing market was experiencing an unprecedented boom. Home prices skyrocketed, and buyers were caught in a frenzy, fearing that they would miss out on their dream homes. A perfect storm of various factors converged, leading to an unprecedented downturn that left homeowners, investors, and the entire real estate industry reeling. In a strange new development, the Texas real estate market has reached unprecedented heights. Experts are raising concerns about a potential bubble as homes are selling for 30% more than their appraised values. Just as the dream of homeownership seemed within reach, the bubble exploded, sending hundreds of thousands of dollars across the state. Get ready as we delve deeply into the multitude of reasons and unsettling events that led to the distressing Texas housing crash of 2023. We'll be exploring the dark side of this financial disaster that left many individuals and families devastated. Please support our channel with a thumbs up and don't forget to subscribe to our channel. Volatile economic landscape. Firstly, a volatile economic landscape has played a significant role that's worthy of mentioning. The sudden and unpredicted collapse in the national economy had a ripple effect on Texas, leading to widespread job losses, reduced consumer spending, and a decline in overall financial stability. A senior economist at the Federal Reserve Bank of Dallas cautioned that Texas is on track to experience a soft landing in 2023. The unfavorable economic conditions produced a disruptive effect within the housing market. This resulted in reduced consumer spending and confidence, causing numerous homeowners to struggle with their mortgage payments, ultimately leading to a significant increase in foreclosures. Home sales declined through the end of 2022 but rose for the third consecutive month in the spring of the current year. Home sales in Texas are following mid-2019 levels. While sales overall are down, home prices are stable at most major Texas metropolitan areas, except for Austin, where they continue to decline. During the pandemic, Austin experienced the fastest rate of appreciation among the Texas metropolitan areas and has regarded the sharpest cost decline as positive. While home building is approximately 33% below record levels, there has been a recent increase in construction activity. Texas single-family permits saw a 4.4% increase in spring, while the values of one-family contracts, adjusted for non-expansion, grew by 6.5%. Home builders expect the construction pace to be uneven, with 2023 starts projected to remain below levels seen in the previous year. Speculative frenzy. Furthermore, a prolonged speculative frenzy that had held the market in its grasp reached a critical juncture. Speculators, enticed by soaring property values, had flocked to Texas, driving up prices beyond sustainable levels. The inevitable bursting of this speculative bubble became evident as the market couldn't sustain such inflated valuations. The crash exposed the fragility of this speculative climate, resulting in substantial losses for many financial investors. The recent housing crash occurred for multiple reasons. One of the contributing factors was the anticipation of housing speculators triggering a recurring crash, a concern that had been forecasted based on Michael Socken's research during the Great Recession in 2021. According to Socken, in the absence of speculation, the size of the boom and the bust would have been about a third smaller. His findings indicate that speculation not only distorted housing prices, but also exerted influence on other aspects of the market. The economic consequences of this fluctuation impacted diverse local economies, initially boosting and subsequently dampening employment, income, and expenditure. During the boom, employment rates were 8% higher than the average, while they dropped by 15% during the bust. Similarly, per capita income saw a 14% increase during the boom, but decreased by 15% during the bust. Interest rates and mortgages. What intensifies this emergency is administrative oversight and lax loaning practices. In the years paving the way to 2023, banks and monetary establishments had been participating in risky loaning. The regulatory oversight, or lack thereof, allowed for unchecked lending practices that contributed to an inflated housing market. Lenders were granting mortgages to individuals who may not have been financially stable or qualified for such loans. This led to a surge in housing demand and artificially increased property prices. Furthermore, lax lending practices resulted in an abundance of subprime mortgages, which are higher-risk loans given to borrowers with low credit scores or inadequate income documentation. This increased the likelihood of loan defaults and foreclosures, further destabilizing the housing market. During the 2008 real estate market downturn, Texas was generally less affected than other states such as California, Florida, and Nevada. This was mainly due to more moderate lending practices and stricter home loan guidelines in Texas. However, here are some key statistics on the 2008 real estate downturn in the U.S. The real estate downturn in 2008 was generally attributed to the subprime mortgage emergency. This emergency was caused by the issuance of high-risk loan advances to borrowers with low FICO evaluations and limited monetary security. The volume of foreclosures increased significantly during the real estate downturn, as many property owners were unable to meet their home loan commitments. Foreclosure rates hit record highs across the country, causing property valuations to plummet. Build to build more homes. Despite Texas constructing a greater number of homes compared to any other state, it is failing to build at a pace that aligns with its substantial population growth and economic expansion. According to housing advocates, builders, and real estate experts, this situation has resulted in elevated housing prices. Several estimates indicate a shortage of homes within the state. Nicole Nosek, leading Texans for Practical Solutions, a nonprofit that advocates for housing bills this session, emphasized that Texas has plenty of instances to learn from. These instances showcase the outcomes of inadequate housing construction to sustain the demands of both the workforce and the growing population. This pattern, evident in expensive states like California, serves as a warning for Texas to act before the situation negatively impacts the working class. In recent years, debates over statewide changes to local zoning laws have taken place in state legislatures across the country. These debates aim to promote housing creation in response to soaring housing costs, which have affected homeowners, potential homebuyers, and tenants alike. According to various assessments, the country needs to build millions more homes than required to address the rising cost of housing. A recent policy agreement has identified city zoning restrictions as a major cause of the state's housing issues. State Representative Justin Holland, a Republican from Rockwall who sponsored the bill, said, "The bill is a private property rights bill. It's a bill that offers solutions based on the principles of the free market. Its goal is to address housing affordability problems and to support both employees and individuals as well as businesses, enabling them to live in close proximity to their workplaces." Oversupply of housing. The 2023 housing crash in Texas stemmed primarily from a convergence of factors, among which an excess of housing was a key component. When housing construction experiences a rapid surge, particularly surpassing actual demand, an imbalance in the market can occur. A substantial surge in investment and construction activity over previous years brought about an oversupply of housing. Builders and developers had initially anticipated robust housing demand, but unfortunately, demand fell short of their projections. This led to a surplus of available housing units, precipitating a decline in property values and an uptick in foreclosures. This oversupply, in turn, can trigger a decline in property values, complicating the process of selling homes at desired price points for homeowners, thereby contributing to a housing crash. Inventory tells the tale. Amid a real estate downturn, there tends to be an excess of homes ready for occupancy in comparison to buyer demand. These existing circumstances can result in decreased housing prices and a deceleration of the housing market. To grasp the significance of the inventory tells the story concept concerning the 2023 housing shortage in Texas, we can dissect a few key components. Housing supply. If the inventory of affordable housing in Texas expands primarily during a housing shortage, it will reflect an abundance of available properties. This oversupply will reduce housing costs and potentially lead to a reduction in general land values. Market conditions. Stock levels may reflect the general condition of the real estate market. On the off chance that the expression, "the stock tells the story," turns out to be as expected in this situation, it would suggest that the high level of stocks in Texas during the real estate downturn was characteristic of a striving market with low demand and possible financial instability. In any case, please be aware that the housing market can be influenced by an array of factors, encompassing economic conditions, interest rates, and local dynamics. Seeking advice from real estate professionals or financial experts is crucial for a more precise evaluation. Should a housing crash occur, Texas might experience a drop in property values, prolonged foreclosure rates, and a decrease in real estate demand that could result in an oversupply of homes and increased buyer leverage, leading to reduced prices. Homeowners could encounter difficulties in selling their properties or witness a decline in their home values. Nevertheless, it's crucial to remember that the actual impact can differ, and different regions within Texas might face unforeseeable effects. Factors such as the nearby economy, job exposure, population growth, and housing supply and demand can affect the severity of housing crash impacts in specific locations. Thanks for watching. Please like, subscribe, and comment below, and watch this one as well.